Joining us now, Taylor Riggs, co-host of The Big Money Show at 12 p.m. Eastern, right here on Fabulous Fox Business, and Gerri Willis, our fabulous Fox Business correspondent.
I like up markets and down markets for the
Just
record.
to be sure.
We'll have to bring, when they go up 2,000, we're going to bring you back.
Okay.
I promise. Taylor, stocks got slaughtered today.
Yeah.
I'm interested, though. Okay, bond yields are also getting slaughtered. All right.
Down, yes.
Now, that may be a recession call.
Huh?
I don't know. But if it's a recession call, how come the jobs numbers? I mean, it's like no one wants to talk about good news, so I'm going to talk about good news with the two of you. First of all, the jobs report up to 228,000. Mm-hmm. Almost twice what the street was expecting. Mm-hmm. But here's the thing. Private payrolls up 209,000, okay? In February, it was 116. In January, it was 79. For the last 12 months, the average is 131,000. So it's just about doubled the 12-month average, okay? That's one point. And the other point is blue-collar workers are increasing their wages and their hours worked. And full-time workers are up 459,000. Part-time actually fell 44,000. That's a direct reversal of what we've seen in recent years. I'm just saying, there may be a big recession out there, but you won't see any of it in these numbers.
Yeah, this was a very good report. And I think most of the comments I read today said if you had taken sort of Wednesday night out of the picture, this is full steam ahead for the re-privatization of the economy.
That's
We're
right.
out of the government, finally seeing job losses in government sector, pushing them into the private sector. This is exactly what this economy needs to see. Now, I do think that Wednesday night changed the game a little bit in terms of the maybe headwind that's facing us with the economy. What I'm curious about is how much of a tailwind are strong economics, strong jobs, enough to offset any of the uncertainty with the tariffs going forward? That's going to be the big question, because there is a little bit of a buffer in this uncertainty period, and you just cited the numbers. That's the buffer. You have an unemployment rate that's rising because labor force participation is increasing. People are trying to come back into the workforce.
Yeah.
That in all economic textbooks sounds like a good thing. But again, the tariff thing has presented some uncertainty, and you saw that show up in the equity market for a second day.
We had, Gerri, I don't recall, in the first term, we had, I think it was late 2018, early 2019. There was a 20% correction in the stock market. Okay, what are we, about 14% now, 15% now, something like that. All right, so we're getting on. Now, there were two things going on in those days. One was Mr. Trump was slapping tariffs on China, eventually bringing them to the negotiating table, and we made a deal which they signed, although they didn't adhere to it. That's subject of another segment. The other thing was the Federal Reserve was tightening monetary policy. They were raising rates, which infuriated Mr. Trump at the time. And since there was no inflation, I rather agreed with Trump on that one, not Jay Powell. But putting that aside, we've seen, to some extent, we've seen this movie before, and it turned out pretty good. Now, Senator Schumer says we're going to have high inflation. Now I'm reading all the economists that dial in my email, clutter up my email box, are now starting to predict recession. We don't know that. We didn't have that the last time. There's no ironclad war. First of all, I might add, just for the hell of it, these reciprocal tariffs go in next week. They haven't hit yet. None of it's hit yet, actually. It's very ironic that economists are jumping the gun on their models. What good are their models? Seriously, what good are their models?
So the economists that are getting America's attention, Chuck Schumer and Whoopi Goldberg.
Oh,
talking
right.
about what's
I forgot
going on.
Whoopi Goldberg.
So
Thank you.
Maybe you don't want to.
She's an old line Keynesian, isn't she?
She is, actually. But,
sure.
So there's only so much you can listen to this because we haven't been here before. It's new territory, right? What Trump is doing is totally different. And frankly, he's got a long roadmap out here that he wants to play out, and I think it's fascinating. What people don't realize is that we have so much government debt coming due over this year, $9.2 trillion. the lower interest rates are, the better it's going to be for Americans. And you could set a fire under the housing market, too, if mortgage rates come down, which they are going to do on this news.
Yes, for sure.
So we don't know the impact of these tariffs yet. We don't even know where they're settling at.
This is the most widely anticipated hyperinflation since hyperinflation was invented. And this is the deepest, worst recession since recessions began. Only none of it's happened yet. There's no empirical evidence. Now, I am also very interested. Gerri's been talking about falling bond rates the last couple of days, correctly so. I mean, they're in the 390s now, the 10 years, something like that.
We're below 4.
We're below 4,
okay.
And that's just going to be great.
So you're going to get your mortgage rate, long-term mortgage rate, towards 6 probably.
Yeah, that's going to make a big turn in the market. People tell me that that's really a tipping point.
Yeah, no, I've been renting my co-op, so I'm going to go out and buy it with these low mortgage rates. Now, Taylor Riggs, interesting story. Oil's fallen to a 3-year low.
Yes.
I don't know where oil is now.
It's 62.
All right, thank you. Now, you could also blame that on the recession that hasn't happened yet.
Correct.
But you could also correctly state that OPEC is loosening the spigots, okay, which is a very interesting story. Help us out on that, please.
So this is a real story that's happening, right? So we're not forecasting anything. So yesterday, OPEC comes out and they said that we're going to be increasing oil production. As you know, more supply, demand staying equal, all things staying the same, the price goes down because there is more supply relative to demand. The flip side, that could also be a demand story. If demand is starting to slow down, you see oil. But again, this sort of sounds like Trump's playing maybe chess here. When you talk about the bond yields, when you talk about able to bring down oil prices, his whole goal was to lower energy costs. You would know better than I would when we see 62 crude start to show up in a CPI print. Maybe it takes a month or two.
How about gasoline prices? Have they fallen below 3 nationwide yet?
I saw a map earlier that was West Coast on was all green, which was in the 2s and the 3s.
Yep.
Now, again, you don't want that to happen if there is a big recession. But if there is falling yields, falling interest rates, falling oil prices that help bring down prices for everyone, that offsets any anticipatory impact from these tariffs. I would also note you had a lot of automakers today. Hyundai came out today and they said, we are not touching prices for at least 2 months. We want customers to know that we are here. Stellantis, I think, said the same thing. We're not touching prices. The employee discount, you now as the public get the employee discount. So these are companies that are choosing to eat whatever future costs they might have, not passing it on to the consumer.
GM working overtime and picking up the overtime. I think Ford was, but I know GM was.
There are also other companies at the margin that are doing the same thing. We're starting to hear from furniture makers who saying, we're not raising our prices. And you know how that industry has been displaced here. So that's very good news for consumers. If you're buying that house now, maybe you can afford the furniture too.
You know, again, it's very interesting. This is the worst recession we've never had. This is the worst inflation we've never had. Maybe it's out there. I'm not going to say that, but who knows? On the OPEC thing, though, really interesting to me. They are playing ball with Mr. Trump in geopolitics. They want to hurt Iran. They're willing to hurt Russia. They're casting their light with Trump because, unlike Biden, they know Trump will support them. They will come into the Abraham Accords. We've all been awaiting this. This is going to radio in $2 plus something gasoline prices, which is going to be a big help to everything. I know bond yields are coming down because stocks are coming down and recession is in the air. I get that. But we will see about all that. We will see. Inside the market, is anybody intrepid enough, Gerri Willis, to say this is the bottom?
So what I'm hearing is that we may have a couple more days of this. We may have a few more days of that. Everybody's waiting for that CPI print next week. see how that goes, if that's positive or negative. It's funny, though, these are the same people who told me it would be important what the jobs market did, and that turned out to be a complete nothing burger, really, for the markets. They ignored it, despite the fact it was positive news.
UBS also this morning said their buyers at low 5,000 on the S&P. We're at 5,100 on the S&P. That's low 5,000.
This is a wonderful buying opportunity. You can buy America here just a wee bit cheaper, and then, of course, you hold it for the next 50 or 70 years like you should, passively, and just ride the wave of prosperity.
That's my strategy, buy and hold. Fact check me. I think on a forward PE earnings, NVIDIA is cheaper than Coca-Cola.
I thought that was the best fact that I had heard.
I love that. But Gerri, Willis, and Taylor Riff. Oh, fabulous stuff.